And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, June the 2nd. I'm John. Thanks for trusting me with your time. As always, our goal here is seeking accurate context in these markets, finding areas of good risk management, and always trying to remain patient. It's going to be kind of hard for us today. Lots of data due out today, much of it already out. We've got the OPEC meeting that we're all anticipating information from. We may have just gotten some. We've seen pretty much a turnaround in crude pricing this morning. We'll take a look at that in the charts shortly. 7:15 this morning, the ADP employment numbers came out. Last month, the initial employment, ADP employment. What am I looking at here? They were looking for an additional 300,000 jobs this month. They were 247 added last month. So they were looking for a boost in job creation this month. That did not come out well. 128,000 only in ADP employment numbers. The jobless claims, which I kind of jumped into a little bit there this morning, initial last week they were looking at 210. They were looking for the same this week. It came out a little bit lower than that for initial jobless claims at 200,000. The continuing jobless claims is also a friendly number. Last week, they were looking at 1.34 million continuing jobless claims. They were looking for 1,325,000 this week. It came out 1,309,000. That was all very difficult for me to say this morning. I apologize for that. Productivity and costs. Productivity down, costs up. We could have probably expected that. 9 o'clock this morning, we're looking for factory orders. 9:30, we're looking for the nat gas numbers. 10 o'clock today, due to the holiday on Monday, where we'll be getting our EIA petroleum status report. That's looking for a 1.3 million barrel draw. And there are also two talking Feds speaking later on today. As far as what I'm seeing, the U.S. stocks facing a multitude of data today, much of it already out. Still set to open higher in early trade. A lot of focus on unemployment information culminating in tomorrow's unemployment number. Jamie Dimon's comments yesterday of an economic hurricane so far has been taken in stride. Crude prices were down over 2% after the Saudis answered the U.S. call to offset lack of Russian production. Something tells me something has changed in that, and just within the last few minutes. The API yesterday announced a 1.1 million barrel draw on crude stocks here in the U.S. And again, the EIA looking for a 1.3 million barrel draw here in crude stocks in the U.S. Across the pond, it's a big celebration today. And I guess tomorrow, the 70-year platinum jubilee of Queen Elizabeth II's reign in Britain. I was watching some of it this morning. Really kind of fascinating. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast, Market Recap, and everything we do here. Subscribe to our YouTube channel. You get notified when we do go live. And looking this morning at the VIX down slightly at 25.63, the dollar index down again slightly at 102.15, and the yield on the 10-year largely steady this morning at 2.9%. Got to say good morning to everybody. Spencer, first one in the room this morning, you win the prize. Shaw, good morning, and hello to the money printing gang, my brother Rick, my brother Tom. Third and fourth in the room. I love you guys. Thanks for hanging out with me. Brian, Tachyon, Theo, Charles, James Swan, good morning. Scott Saw, and he conquered. James Saw was up 500 in the combine, then 600, now back to even. Might just give up on the morning trade and wait for the U.S. Open. And Spencer has a kind of a good thought for everybody there. You know, it's easy to get caught on the wrong side if you're in the market prior to the Open. When the U.S. market's open, there's a whole bunch of new participants that enter the market. And of course, as we all know, things can change quickly. Good morning, Anne-Marie. It's a pleasure to see you. Alfred, Jerry is awake, and hopefully John is too. Bill Phillips, good morning. Marcelo, Terry, Khalid, Kevin, James, Vince, Zachary, Denise, good morning. Haven't seen you in a while. JD, always a pleasure. Looking forward to seeing you in the flesh next week. JM, good morning. Scott, masking duct. Scotch masking duct tape. Saw. Sarah Hall, as always, good morning and prayers and love to you as well. Manuel Caesar, Drum Lab, good morning. William, dead letter opener. Isaac, Dan Trader, Sunny, good morning. It's a sunny day here in Chicago. Hopefully it's sunny where you are, dead letter opener. Back to a negative balance for the week. Sad face. WTI looking like a shake and bake market today. Trading Research, good morning. Jack Hudkins, Urek, Federico, Joe, Luis, Rusty Golfer, my spirit animal. Dead letter opener. I don't know who we were talking about here, but Dan Trader just checking EIA oil is at 10 Central, 11 a.m. Eastern time. Correct, because of the holiday on Monday. They pushed it off a day. Kyle, glitter sandwich, Scott masking duck. Exactly, duct tape. All right. Hey, Poolman just passed step one yesterday. Congratulations. Right. See a couple of new names there. Thank you for joining me. Thanks for hopping in and saying hello. And it is, Mr. Diamond. Yeah, right? Probably looking for a break so he can buy it. Sometimes with the delay, between what I'm saying and what you guys are talking, I get a little confused sometimes, and I apologize. Great to see everybody here. It's Thursday. We got today, we got tomorrow. It's a shortened week. Sometimes those weeks seem a little bit longer than the normal weeks, but we've got some good opportunities. It's been a good trading week so far, from where I've been sitting, and looking forward to seeing that continue. But I'm not going to put that pressure on myself. I'm starting from zero today, like I start every day. If you start trying to keep streaks alive, if you had a good day yesterday and you think, boy, I can really knock it out of the park today. Sometimes we see some of our biggest winning days turn into bad days the next day. So just put yourself in the seats. Remember you're starting from zero today and follow your process. Good things will happen if you follow your process. If your process is good. It is Thursday. It is Make Hogue Money Day. I just put in the link so you can register for Make Hogue Money. We had a good day on Thursday. We had 2 trades. We made about $1,400, and I'm looking forward to seeing the opportunities that you guys bring to me today in Make Hogue Money. As always, we're going to try and get through the charts relatively quickly. There's always a lot to talk about, but I like to give us a little bit of time before the S&P Open to discuss possibilities before the Open for the S&Ps. We had an opening range trade Tuesday that paid very nicely, and then a continuation after that. We're going to have to see what we see today. You guys are bringing your knowledgeable traders, and we'll talk, vote, and trade if there's an opportunity. We don't have to trade, right? Okay, let's jump in to the S&Ps here. Don't really have time to be checking Twitter or anything about what might have just happened in crude oil, but we're going to be focusing on what we see. Let's take a look. Okay, so this is the daily in the S&Ps. We kind of sensed last week that we started to see an increase in open interest on up days, where on the way down, we kept seeing decreases in open interest on the moves to the upside. we're setting up what I would call a bull flag. And if we break out the high of the bull flag, the target would be all the way up here to about 42. The bull flag seems to be kind of cutting off activity. Volume has been maintaining a little bit. We did lose open interest on the push to the downside yesterday, which is, again, a shift. We start seeing open interest coming in on up days and losing it on down days. That's a little bit of a personality change. Now, I'm not suggesting that our low is in by any stretch, but from what I'm seeing now, the downside auction is suffering and the upside auction is actually bringing more interest. This, of course, can change at any time. We know that our acronym here on the market forecast and market recap is ACH. Anything can happen. So what does it look like on the 30-minute chart? Okay, we're still looking for data. We know that we've got factory orders, nat gas. We got a couple of talking feds. Most of the information that we're looking at is already out today. So yesterday, we opened above this trend line. We broke back down into it. Okay, well, that was a pretty decent opportunity for us. As a matter of fact, I think our opening range was not the high of the session. The market opened, left the opening range at the low, failed to take out the previous day's high, and as soon as we broke back down below this trend line, looking at this is somewhat pivotal for us. The move was on to the downside, and what we did was, which was pointed out, I think, by my good friend Vince yesterday, was we still had this little gap to close down here, and we closed that gap yesterday. Now we're kind of rotating back higher. Settlement in the S&Ps is 40.99. Put that on your chart. It's the basis where margin is attached to for today. We've got some overnight longs in this market. We've got the possible bull flag breakout. Remember, these are not finite levels here. These are zones. So we're going to have an interesting morning in Make Hogue Money in the S&Ps, because we're going to be contending with this trend line a little bit, and we're going to have to see how that responds when the regular trading hours open up. To me, this trend line is a little bit pivotal for us. If we can break out above it and we start to bring in volume, I see this market again getting back up to around $42. If we fail to hold above it, this market could certainly turn around and head us lower. I mean, we've got some naked points of control down here. There's lots of visuals down here for us to look for to head to the downside. And there's a lot of naysayers out there too. Our good friend Jamie Dimon, for instance. Now, there was another economist from J.P. Morgan yesterday that said he's not seeing any sign of recession in the actions of business leaders. Okay, we'll take that for what it's worth. Watch the open. We're in range, in value. This line right here is going to be somewhat crucial for us this morning in the S&Ps. Here, let's take a look at crude oil now. So we had a pretty decent downside move in the overnight, and there was some pretty short overnight inventory. We've been increasing open interest in the crude oil on a daily basis since the 25th. Higher open interest, higher open interest, higher open interest, higher open interest, higher now on the way down. We added another 15,000 estimated in open interest yesterday on a down day. Does that mean that sellers have come in? It might. We're still waiting for new information here today, aren't we? All right, so fundamental information gave us that push to the downside. The Saudis and OPEC were indicating possible supply relief for what we are missing, or the world is missing, from Russia. Something may have changed. Looking at the market, I would have to say something did change. Here's the 30-minute chart. We settled yesterday at $115.26. Put that on your charts. It can be a helpful number for us. We had a lot of overnight shorts in this market, and sometime here about it's about 7 o'clock, something changed. Either our overnight shorts got nervous and just wanted to get out, or there was a change in the information. We know that there's a big OPEC meeting going on, and I haven't had the chance to go look and see what happened. So we're looking at a market that has opened with a gap. I'm going to make an assumption because we are just opening. We don't see that the gap is filled here. The gap fill would be to 1482. So we're still opening with a gap. We've relieved a lot of our overnight inventory, which was short. Here's the 1 minute. Where are we? Here we are. So we've got a what would look to be a relatively large opening range here. 36 ticks. Okay, now we're on it. $20 ticks to the downside. So we've broken out to the downside in crude oil with a gap. So if that is the case, we've opened outside of the range from yesterday. That's an imbalance. We've left the opening range at the high of the session. We had overnight inventory that was short that just adjusted, and we were unable to close the gap really early in the session. Well, dead letter opener, I think the Saudis have gotten a call from us to increase production so we can get some relief from these high prices. So with the opening range at the high of the session here, and the size of the opening range is relatively small. We're looking, well, not relatively small. We're looking at 40 ticks. So that's a pretty sizable opening range. But we get an opportunity back inside of it that can help us limit risk. But right now it looks like we've got some sellers that have taken control right off the open. When the opening range is one extreme or the other, it can be an early indication of buyer, or in this case, seller control right off the open. There's no guarantees of anything actually playing out because, as we know, anything can happen. It just gives us an early indication, especially when there's a gap, that there may be sellers in control in this market. We're going to come back and take a look at that just before we end the forecast this morning. Looking at the Nasdaq, we have the same but different. You know, these equities are, of course, very tightly wrapped together, but usually there's some sort of differences. You know, we do see that between the Nasdaq and the S&Ps. We lost open interest in the S&Ps of about 9,400 yesterday. However, in the Nasdaq, we added 3,800 in open interest. So the downside move inside of this bear flag appears to be a little bit healthier. Now, we did have some information at the end of the day yesterday about Meta that may have changed our open interest at the end of the day slightly. I don't think it's that big of a deal. We're still looking at a bull flag that appears to be intact. Bigger picture, that we're still looking to the downside, but again, we do see some personality changes and some possible changes in direction in volume and open interest. Here's our bull flag. We failed above it yesterday, the same way we did in the S&Ps. We've failed above it here now. We're still in range and in value, so I'm going to suggest trying to stay patient unless we get an opportunity for an execution at or near this trend line. Because why? Because that trend line can help us manage risk. We can limit risk in and around that trend line, hopefully. It can all blow up in my face because I said it, and the markets usually have a tendency to do that. They like to make a liar out of us. So we're in range, we're in value, both in the S&P and in the Nasdaq. You may be better off sitting on your hands for a little while and looking for opportunities as the day goes. We've got plenty of time before the open. Things can change. And of course, we're going to be together for the open in the S&Ps to see if we can find some good opportunities. Lamus, it's good to see you back. Okay, gold. I've kind of put on a little bit of a back burner, maybe. I don't know. We attempted to leave this area of value of balance yesterday. This is, of course, the daily chart. We were looking at the last week's low and last week's high as the extremes of our areas of balance. We lost 7,200 in open interest yesterday on an attempt to kind of close below our area of balance, and we came back into it. So did we just cover some shorts here yesterday? We're back centrally located inside this area of balance. I'm seeking opportunities at the extremes against short time frame levels today. So taking a look at the 30-minute chart, okay, we have overnight inventory. We've opened with a gap. We've yet to close that gap. We have been unable to close that gap. That I find interesting. We've traded to this naked point of control. These markets are extremely visual. They don't like to leave things unchecked, and naked points of control is one of those things. Yesterday, we had a lot of overnight shorts that just basically brought price back to settlement. This morning, we had a lot of overnight longs that tried to close the gap in the regular trading hours and were unable to. That tells me maybe there's some potential legs to the upside, but where do those legs end is the question. I mean, we got a swing high and we've got last week's high above that. There's also another visual up here in the form of another naked point of control. I'm having trouble here finding areas where I can limit risk. It's going to be a kind of a tough day. And because we are centrally located between last week's high and low, I'm looking at this. I mean, it can be a random walk. We could trade down to close the gap and find support there. We could go to the low of value from yesterday before we find support, and we could go there. We could just grind this thing higher all the way up to take out and check this naked point of control, or even check last week's high. Point being is we're in the middle of that, and I'm very confused and having a very difficult time finding areas to limit risk. In short time frame, yes, there are areas to try and limit risk. I'm going to be a little bit more patient in this market today and take a look and see where this market takes us. And if the market says, hey, Hogue, here's a level that really looks good, let's try this, then I'm going to act. I'm not going to be in a hurry, even though we've opened out of range and out of value from yesterday. In the longer time frame, in the bigger picture, we're right in the middle of a longer term area of balance. So I'm kind of back burnering gold this morning, and it may cost me, it may not. We don't know. Here's the euro. We've got range-bound activity again. Volume was lower yesterday. Open interest was inert. I mean, we added 200 in open interest, which means nothing. Short time frame control. We're 1 week to roll over. So we may be more likely to stay in a range because we're coming into rollover. No help for the last 7 days from volume or open interest. It's been like salt and pepper, up one day, down the next. Overnight inventory, we're a little bit long here. Settlement is down here, 106.60 and a half ticks. We're in range. We're holding above value. Does this mean that we're going to continue to see buyers come in, or are overnight inventory longs going to capitulate at some time if they don't get what they're looking for, which is more help to the upside in regular trading hours trade? Okay, this market is also somewhat backburnered to me because it is coming into rollover. The 10-year. So we had our breakout down below our high target area that we've been talking about for a couple of days yesterday. Today seems a little bit more digestive. We've got an inside day in extended trading hours. I'm really looking, if I'm going to be trading this, for a decent opportunity to see us back up at this target-rich environment that we were talking about for another opportunity to look for an execution there, because again, I can limit risk. Here's our target rich environment. We held it, we broke hard. Now a move back towards it could be an advantageous opportunity for us to look for another execution at that level. What do you think? How about the nat gas? So we added 7,200 in open interest off the weekly kickoff low last week. Upside in the bigger picture still remains intact. We've had some pretty decent pushbacks, anywhere up above $9. We're going to see if we get another opportunity to look for shorts there or find some acceptance above weekly kickoff high this time. The more often we get up there, the more likely we are going to exhaust the sellers that are up there. We testing to seek those to check those recent highs. Here's our move yesterday, right off the weekly kickoff low that occurred before the open. Look at this inventory adjustment. Longs get a little nervous before the open, take price right back to settlement. This is one of the reasons I put settlement on every chart, is because look where the market went back to and found support. Settlement, weekly kickoff low, and pow. We've got those same overnight longs here. Now the market is open. If we get an opportunity, if we're looking to buy weakness, at the end of an overnight inventory adjustment, can be a decent level for us. Right now, we've opened with a gap, and gap rules apply. Let's see what the crude oil is doing. So, opening range trade. Still remains valid for now. What is this doing? Still remains valid for now. Here's what I'm talking about. When you get the opening range and it is left at one extreme, sometimes you get the market will come back to halfway back, which gives you a much cheaper opportunity to enter that trade, almost real cheap. And if the market continues to push down below and leave that opening range at the extreme, then you've got a really tasty trade on your hand. No, I don't know what's going to happen. I'm suspecting that we're going to probably take out the high of this, because it does seem like there's some sort of news. Rick's talking about on the daily chart here, took out a trend line off previous highs. Let me see if this is what you're talking about, Rick. So we got this high here. We got this high here. Or are we looking more like this? A or B? I'm thinking more like B. So if that's the trend line you're looking at, we got 1, 2, 3, maybe 4 points of contact on that. At least 2, maybe 3. You got an opportunity to catch the breakout to the upside. B. All right, I got you. All right, we'll leave that on there, and we'll see how that plays out tomorrow morning for us. That's the RH trend line. Let's see how the opportunity comes. All right. Okay, so we've been through the charts. We've got some work ahead of us here this morning. Looking forward to seeing everybody on Make Hogue Money. Trying to think if there's anything else I wanted to mention. Lemus, it's good to have you back. Thanks for the trend line, Rick. Mike saying, have to think natural gas can reach new record highs like lumber and oil and indexes last year. It's entirely possible. We're looking for that. All right. Let's take our deep breath. Stay humble, grateful, and creative today. Yes, anything can and will happen. My mic is too soft. Let's try this. Better? Gosh, that seems like it's a little hot. Maybe right about here. Maybe that sounds better. Thank you, Rue. And yes, stay patient. Stay humble, honest, patient, grateful, and creative. We'll see you in Make Hogue Money. If I don't see you there, have a great trading day. Looking forward to seeing everybody for recap. There will be no podcast today. We've still got a guy that's out of the office, so you're going to see me for the recap as well. You're going to get sick of me soon if you're not already. So we'll see you on Make Hogue Money in just a few minutes. I'm going to get over there, get everything set up, and we'll see you shortly. Trade well today if I don't get to see you.